Hello friends, today we'll discuss the golden rules of accounting. We are going to discuss about the golden rules which we are going to use in accounting, or we can call it as bookkeeping. Now, in a business, we are going to deal with three things. We are going to deal with people, we can call them as persons. We are going to deal with assets of the business. We are going to deal with expenses incurred by the business and the incomes generated by the business. So in a business, we are generally going to deal only with these three things. We are going to deal with people, persons, we are going to deal with assets, we are going to deal with expenses, incomes. Now, in the accounting language, we call the persons as personal accounts. We call the assets as real accounts, and the information relating to expenses and incomes is called as the nominal accounts. Now, a question comes to our mind: what is this term accounts? I'm just spelling it here. It is ACCOUNTS, accounts. It's a plural form of account. Now, what is this account or accounts we are talking about? In business, we are going to have various, or we can say numerous, transactions with people. We will have numerous transactions about assets. We will have numerous transactions involving expenses, incomes. We are going to keep a count of these transactions. Every unique piece of information, for which we are keeping a count, we call it as an account. So, what is an account? It is nothing but keeping a count about every unique piece of information. So actually what we are going to do is we are going to keep a count of the information relating to every unique piece of information. Now, what do you mean by that? What is an account? I'll just draw an account for you here. This is how an account looks like. It's a record. So what is an account? Account is only a record, collection of information. Account is the full form, and this is how we write it in the short form. Say I'm talking about salaries account. Now, this piece of paper is used for keeping a count of the salaries. So what is the salaries we have incurred? What is the amount of salaries we have paid during the period? At a particular point of time, we might have paid 1,00,000 of rupees. Next month, we might have paid 1,20,000 rupees. We might next have incurred 90,000 rupees, say January, February, March, etc. So we are going to keep a count of the salaries in this account called as the salaries account. This will help us to find out what is the total amount of salaries paid during the period. So that is an account. I'll just draw one more account for your, let us say I have an account called as the bank account. Now what is this bank account? It is a count of the bank transactions. So whatever transactions we are having with the bank, it is counted in this paper called as the bank account. So how does it look like, the bank account? I'll show it here. Bank account. we deposit some money, say 1 lakh. We withdraw money from our bank account for meeting our expenses, say 50,000. We again withdraw another 10,000 rupees. We deposit, we get some sales and we deposit some money in the bank, 2 lakh rupees. We make another deposit of say 3 lakh rupees. So we are just collecting information relating to the bank transactions in this paper called as the bank account, and for the sake of convenience we call this side as the debit side, the left side as the debit side, and the right side as the credit side. I hope you are able to understand the meaning of the term account. It is just nothing but a count for every unique piece of information. Okay, now let us learn the golden rules of account. Now the question arises, why I was writing something on the left side and why I was writing something on the right side, why I have recorded some information on the debit side and why I have recorded information on the right side or the credit side. Similarly, you can see I have recorded some information on the debit side of the salaries account. This is the debit side and this is the credit side. So what are the rules for recording information on the debit side or the credit side of an account? I'll discuss them here. Let us start with the first type of accounts we are going to deal with, personal accounts. I told you in a business we are going to deal with people, and people are called as personal accounts. We are going to keep a count of the transactions with people. The first and the foremost are the owners, promoters, shareholders. These are the people who run the business. Then we have banks with whom we are going to deal with. Then we have the customers, people who buy our goods, who use our services, who give us income. Customers, in accounting language we also call them as debtors. These are the people who owe money to business. These are the people who owe money to business. They buy our goods, they use our services, and they owe money to us. Then we have the suppliers, vendors, people who supply us goods, people who provide us services. These are the people who owe money to, we can say, I'll just erase this. Or we can say these are the people to whom the business owes money. Business owes money to them. They are also called as the creditors. Now what are the rules relating to personal accounts? The rules are debit the receiver and credit the giver. DR is the short form for debit and CR is the short form of credit. So debit the receiver and credit the giver. Now what do you mean by debit the receiver? If somebody has received money or money's worth from the business and they owe money to business, owe money to the business, then we debit them. Who are credit the giver? When will we record somebody as a giver? When business owes money to them. So when the business has taken goods or services from them and the business owes money to them, then we are going to credit the account. The rules are debit the receiver and credit the giver. Now let us go to the next set of accounts. We have the real accounts. I told you what are the real accounts. These are assets. The business is going to have assets like the land, building. Now which type of buildings we are going to have? The factories, warehouses, admin offices, showrooms, sales depots, etc. Then we will have assets like the machinery which is there in the factories, equipment, Softwares, without applications we cannot run our business nowadays. Computers, electrical fittings like air conditioners, etc. Electrical fittings, furniture, and stock. What kind of stock? Stock of raw material, stock of work in progress, that is semi-finished goods, stock of finished goods, packing material, etc. So we are going to also have stock. Now, what are the real account rules? The real account rules are, I'll write it here. Debit what comes in and credit what goes out. So the real account rules are debit what comes into the business. If an asset is coming into the business, you have to debit it. Credit what goes out. If an asset is going out of the business, we are going to credit it. So these are the simple rules relating to real accounts. Now let us learn the third type of accounts we are going to have. Now we also call them as the nominal accounts. They are called as nominal accounts because they are namesake accounts or information which is temporary in nature, which is recorded only for the purpose of calculation of profits, and once the profits are determined, this information is of no use to the business. So that is why we call them as namesake accounts, temporary accounts, or nominal accounts. Now, what are the nominal accounts? Expenses and the losses incurred by the business, incomes and gains of the business. What are the expenses we incur in a business generally? If we have taken a premises on rent, electricity, fuel charges, water expenses, repairs, maintenance, salaries of the staff, wages of the workers, then depreciation. Loss in value of an asset is considered as a loss for the business. It is a loss, it is a nominal account. Discounts given to customers, interest paid to banks where we have taken a loan to the when we take a loan from the bank, we pay them interest. Discounts given, interest paid, then transportation expenses when we transport goods from one place to other place, packing expenses, advertisement, etc. So we can have a lot of expenses which we are going to incur in a business. I'll discuss them once again. Rent, electricity, fuel charges, water, repairs and maintenance, salaries, wages, depreciation, discounts given, interest paid, transportation, packing expenses. There can be many more expenses. Then what are the incomes we are going to have? Income from commission, income from rebates, discounts, sales of goods, fees. We can get some when we invest our money in some bonds or shares of other companies. We may get some interest income, dividend income, etc. Now, what are the nominal account rules? They are very simple. Debit all expenses and losses, credit all incomes and gains. So all expenses and losses should be debited, incomes and gains should be credited. So these are the golden rules of accounts. I'll summarize them once again. Personal account rules are debit the receiver, credit the giver. When the person owes money to business, he has to be debited. When the business owes money to the person, he has to be credited. Real accounts, assets. Real account rules are debit what comes in, credit what goes out. Then nominal account rules. The rules are debit all expenses and losses, credit all incomes and gains. So these are the golden rules of accounts. So these are the rules which we use to prepare accounts for every unique piece of information arising out of the various transactions of the business. In the next lecture, we'll learn how to use these golden rules of accounts. Thank you.